VanEck advisor says spot Bitcoin ETF impact is overestimated despite long-term gains. Last updated January 1, 2024, 3:52 EST. 2 Min read disclosure. Crypto is a high-risk asset class. This article is provided for informational purposes and does not constitute investment advice. By using this website, you agree to our terms and conditions. We may utilize affiliate links within our content and receive commission. VanEck advisor Gabor Gurbacks pointed out that the hype of a Bitcoin BTC spot ETF in the market could be overestimated in terms of short-term inflows but could see long-term gains as the window widens. In a Jan. 1 post, Gurbacs wrote on X, formerly Twitter, that people have overstated the impact of a spot BTC ETF in recent months, predicting limited inflows at first before a subsequent surge in inflows. According to him, only $100 million coming from mostly recycled funds from institutional investors could find its way to the market after the Securities and Exchange Commission (SEC) approves an ETF. In my view, people tend to overestimate the initial impact of U.S. Bitcoin ETFs. I think maybe a few $100 flows, mostly recycled money. Long term, people tend to underestimate the impact of spot Bitcoin ETFs. If history is any guide, gold is worth studying as a parallel. https://t/co/6 Ananias C09, Gabor Gurbacks at Gabor Gurbacks, December 31, 2023. However, in the long run, the drive-by institutional investors will see staggering inflows in the market, with the analysts using the past statistics of gold as a benchmark to predict the market. A golden case study. Going by the renowned gold analysis, bullish sentiment is justified in the sector as trillions are expected, although the precious metal has a higher market capitalization before the introduction of the SDPR State Street ETF. GLD Innov 18, 2024. After the gold ETF was rolled out, the orbit of the asset quadrupled from $400 to $1,800, with its market capitalization surging by $8 trillion from $2 trillion to $10 trillion. Similarly, Bitcoin stands in pole position with a market hovering around $750 billion. However, behind gold's position at the time, if estimates are precise, the coming years could see trillions in the market, and in Gurbacs' view, the subsequent might be faster. I also believe that only a few $10 billion will come from Bitcoin ETP adoption, and it won't come all at once. But given 1, a relatively low Bitcoin float, strong hand/long-term holders, and 2, systematic scarcity via having schedules, that boost will be significant. He noted that most industry participants have hyped the projected growth while losing sight of the wider possibilities. Bitcoin will create its capital market surge beyond ETFs in the coming months. A major argument has been the credibility an ETF will bring to the assets among institutional investors. Gurbacs sees more opportunities in state sovereign funds, institutional funds directly affecting the market, as was recorded with gold. More hype into the new year. In weeks leading up to the new year, cryptocurrencies, particularly Bitcoin, notched inflows, boosting the overall market cap and assets under management (AUM) on the back of a potential spot BTC ETF approval. The narrative that shaped the crypto narrative for most of the year dragged the market to new highs not seen in months, as wealth funds and other investors increased their exposure to Bitcoin. Last year, Bitcoin investment products recorded inflows of $1.6 billion, while AUM soared over $36 billion. Several analysts predicted an ETF approval could bring trillions into the market, massively affecting the asset's price. Enter your email for our free daily newsletter, a quick 3-min read about today's crypto news. Sign up. The site is protected by reCAPTCHA and the Google privacy policy in terms of service supply. IMG SRC equals https://simg co/p/ml300 JPEG alt equals image class equals img ID equals newsletter pop-up img.